Good afternoon, ladies and gentlemen, and welcome to the KAPE Technologies PLC full year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I would like to submit the following poll, and if you'd give that your kind attention, I'm sure the company will be most grateful. And I'll now like to hand you over to Ido Ehrlichman. Good afternoon.
Thank you very much, Jake, and thank you everyone joining us today. I suggest I'll start with the presentation of the full year results, and then very happy to answer any question you post on the Q&A channel. Here with me, Oded Baskin, CFO of KAPE Technologies. 2021 was a very strong year for KAPE, and we are very pleased to report yesterday another strong set of results. It's a year that we managed to progress very well in our organic growth initiatives, as well as complete two highly strategic acquisitions. And overall, today we crossed the 6.6 million paying subscribers, one of the most scalable platforms in the consumer security and privacy space globally. And reminding you, we don't have any free products. All of our customers are paying customers. Revenues grown 89% to $230.7 million, substantially above the guidance we gave. We had only 2 weeks of contribution of Form Express in last year, so compared to the $197 to $202 million of guidance, KAPE organically delivered $212.5 million. It continued to be very profitable, with a pro forma adjusted EBITDA up 97% to $78 million. Now crossed the 850 employees, so quite large organization, operating from 10 operational hubs. What we were able to build from KAPE in the last few years is a very scalable platform. Today we have millions of people around the world that trust us in protecting their digital lives. We operate in a very attractive market, so the combination of the scale, our very efficient marketing activity that now has a lot of our sales anyway coming organically in a market that's growing at least 17% year over year, and the fact that we were able to build up over the year a very strong recurring revenue base that drive very high visibility on future earnings puts us in a very advantageous position to continue to lead and grow the business in the next few years. I'll start describing the main operational updates for 2021, and I'll let Oded to take you through the financial highlights. First of all, like always, we are prioritizing our organic growth, as well as always looking on interesting acquisition opportunities in order to accelerate the growth even further and the expansion or the development in our strategic roadmap. Organically only, we grown 20% last year, with the impact of the consolidation of ExpressVPN that we completed just before Christmas. We crossed the 6.6 million customers in total, which is a great result. I'll remind you that the way I'm building the business is to move in two parallel pillars. One is to get to a scale in the commercial activity, and the more customers choosing us to protect their digital life, the better. We are definitely keen to get to a significant scale as much as possible, and I think the current scale is phenomenal, what we were able to achieve in the last few years. In parallel, the second pillar is to build up a strong product offering that ultimately will provide very good level of security to every angle of our customer digital life. And in both pillars, we had a very good progress last year, and by the way, this continuing to the current year as well. KAPE is structured in 3 business segments. The digital privacy, that is our largest segment, especially after the acquisition of ExpressVPN. The digital security, our endpoint security activity, and the digital content based on the Upselling acquisition. I'm very pleased that each one of the segments grown double-digit growth in top line last year, both the privacy, the security, and the content segment. We now, 1 year after the acquisition of Upselling, we couldn't be happier with the way Upselling was integrated into the group. The integration process is now complete, and all the strategic initiatives, the reduction in the customer acquisition cost and the contribution of Upselling in ramping up the numbers of sales coming from organic traffic sources to each one of the KAPE brands, as well as the continued development of Upselling as an independent growth engine, all happening very well. In addition, we completed the acquisition of ExpressVPN before Christmas. We are 3 months down the line of the integration plan, and it's completely on track. The two teams are working very well together. We are progressing exactly as we planned on combining the product set to one platform, realizing revenue synergies, the optimization of retention rates, as well as realizing the planned cost synergies.
Revenues are ahead of expectation, increasing by 89% to 230.7 million, comparing to 122.2 million last year. ExpressVPN acquisition, which completed on 15th of December, contributing revenues on net basis after consolidation, $18.5 million. So after deducting ExpressVPN effect, we are also way ahead of our expectation. The pro forma adjusted EBITDA ahead of guidance with 78 million comparing to 39 last year, increase of 100%. We continue to have significant growth in the recurring revenue contribution to 92% on a full pro forma basis, comparing to the 87% last year. Adjusted operation cash flow is 44.1 compared to the 20.4 million last year, increase of 116%. We had oversubscribed equity raise following ExpressVPN acquisition of 258.3 million pound, which served the initial cash consideration of ExpressVPN. We also increased our committed RCF with our club of banks by 70 million to a total of 80 million by the end of the year.
The market dynamics remain very positive. In the recent market study we completed, we are seeing that the market continued to grow 17% year over year to a total addressable market by the end of 2024 of $19 billion. So despite the fact that we've grown to a substantial scale, there's still a lot of room to continue grow and grab even greater market share. We are seeing, and obviously we experience from our own customer base, but people entering the consumer privacy and security market from the digital privacy angle tend to be younger, with 70% of customers below the age of 40. This is, by the way, the opposite to the traditional AV market, which is a good signal to the potential growth and the relevancy of our product solutions in the marketplace. The market the drivers are a combination of three things mainly. One, we are seeing now more than 5 years the continued growing awareness. People understand that they need to be more proactive and gain back the control in the information they share online. Data privacy is a big theme in the overall cybersecurity market and a big concern for millions of people around the world. In addition, we are seeing exponential growth in the numbers of devices connected to the internet, which obviously reinforce and accelerate the need of people to put security measures to their home Wi-Fi connections. Most of the people around the world still today, despite what happened during the pandemic, don't have any significant security software implemented in their home Wi-Fi connection, and we are seeing it as another growth driver in the next few years. And the trend in the consumer technology world in general and in our industry as well, the move from freemium to premium. So people are keen to pay and buy a subscription and get good quality of solution compared to getting a free product, compromise their personal information with a very poor user experience. Now that we are getting closer to 7 million paying customers, we are seeing a few common themes across our customer base. First of all, we are seeing that most of them coming from Western European countries and the US. Intentionally, we target those countries because we see that the acceptance and our ability to drive high lifetime value there as a SaaS business is the most efficient. Age between 20 to 45, which is similar to what we are seeing in market studies. Tech savvy to understand the value and the need to live more secure than private digital life. And it either that they are coming from the privacy angle that they want to limit the ability of third-party organizations to track their online activity, or before and mainly after the COVID-19 pandemic, that much more people connecting, working from home, working on the go. So they need to have the ability to continue their daily life and business routine. And we are seeing, especially in the freelancer community, big success, and a lot of them choosing our software solution. Doesn't matter if it's the remote access, the dedicated IP, which is one of our big upsells, as a big growth area in our customer base, as well from the more security angle, that people understand that implementing a firewall that monitor and track their internet connection enable them to us as a provider to block a lot of the cyber threats already before they are downloaded or penetrate the device itself. KAPE, the way we look on our product strategy is fairly unique to a lot of our competitors. We don't see our product only the subscription solution that we are selling. We look on all the user journey from a belief and from a view that to be successful consumer tech business, we need to make the user experience as seamless as possible, and ultimately in one click to help people to get completely secured, private, stable, and fast internet connection. So from the initial intent, when the user is looking for ways to improve his digital privacy, a secured way to connect remotely to the internet or to organizational tech assets. It doesn't matter if it's coming from organic traffic source or paid user acquisition. We want to cover the full spectrum of go-to-market channels. We did a lot of effort in 2021 to ramp up the sales of KAPE coming from organic traffic sources, and Web Excellence was a big part of this effort very successfully, as well as continue to leverage and develop our competitive advantage and know how to drive high volumes of user acquisition campaigns. The next stage is that the user is buying one of our subscription-based solutions. Doesn't matter which one of the brand. Obviously, ExpressVPN is a great addition to our brand portfolio. And the next step is that we will look to grow and optimize the lifetime value of our customer, either by improved retention or by additional upsell. And we obviously, through the first 2 years of the subscription, where most of the churn is happening, people go back to the marketplace. And once we have the Web Excellence as an independent growth engine within the group, we are able to get exposure and to have success with those people that changing and getting back to the marketplace and looking to change or get new offers to their security or privacy providers. Geographically, we continue to focus mainly on countries that drive high lifetime value to our customers. 82% of our revenues in 2021 were generated in the North American market and Western European countries. Worth mentioning that our exposure to Russia is minimal. We don't have any operational dependency on Russia as a country, and the revenues we generate in Russia are less than 1%. So insignificant, and it's not an important market for us. We do see in the last 3 weeks greater level of demand. This is true in general that usually the first quarter of the year is our slowest quarter, but the strong momentum of the fourth quarter of last year continued to this year when we're seeing greater level of demand across the board, each one of the segments. And in the last 3 weeks, especially when there were uncertainties in different places around the world, and obviously Facebook, Instagram, all the social media started to promote and educate people that they can get access to an unparalleled or undisrupted content using a virtual private network application. We saw another spike in demand in the market, which obviously help us to drive in a very strong momentum compared to what we guided for the year. Acquisition of ExpressVPN is an acquisition that it took us time to bring to the final line, and working with the team in the last 3 months, we like what we see. ExpressVPN is a great business with great team, and we working very well together. The integration with ExpressVPN is now completely underway. Both the ability of KAPE to extend the reach to the premium part of the market and to get exposure to sales in a much higher price point opens up a lot of interesting initiatives and opportunities to increase the revenues further. Upselling cross-sell opportunities, both implementing some of the ExpressVPN features and technologies into the other KAPE brands and vice versa, combine the different product offering into one consolidated platform. And the fact that together we serve more than 6.6 million customers is giving us the opportunity to make a difference to millions of people around the world, to enable them to continue their daily life, enjoy digital services, but in a fully secured and private way. Synergies, there are 2 elements. One is our ability that now we have Webcellence and ExpressVPN in the same group to optimize down the customer acquisition cost and create even better unit economics. We did it very successful with the other KAPE brands, and there is a lot of knowledge and capabilities in the Webcellence team in order to help each one of the KAPE brands to drive greater level of sales from organic traffic sources, and by that to optimize down the customer acquisition cost. As well, we are very confident that we'll be able to achieve the cost synergies that we targeted for this year, which is $19 million, which on an annualized basis is $30 million. In addition, now that both companies, KAPE and ExpressVPN, are very much R&D driven, 47% of the core team are R&D and product engineers, and we have one of the best teams in the industry today in order to drive continued innovative product strategy. And in the distribution, which is a key competitive advantage for KAPE, and now we have unparalleled distribution platform, both from organic marketing sources, paid user acquisition, and another benefit from the ExpressVPN acquisition was that we got a very strong channel partner network with millions of devices around the world, Acer, Philips, Nokia phones that pre-install one of our software solutions to their devices. Webcellence acquisition is now, the integration is complete. We saw a reduction in the customer acquisition cost of close to 16% for the KAPE brand, which was the initial targets, and we are very pleased to see the optimized LTV to CAC ratios. In addition, Webcellence is now the digital content of KAPE. We are seeing very good results from Webcellence as an independent growth engine, a new growth engine within the KAPE group, and we encourage the Webcellence team to continue to deploy their knowledge and technology in order to duplicate their ability to drive sales in different verticals, both the traditional or the core privacy and security vertical, that this is the key for KAPE, as well as into a new verticals like website builders and few others. And it's going very well. This is another element of a source of growth that we are very happy to have within the KAPE group.
The digital security segment returned to growth with revenue increase of 17.5%, driven mainly by 20% growth in revenues from Intego, our endpoint security product. Pro forma year-on-year revenue from the digital content segment grew significantly 52.5%, where we're taking full 2020 versus 2021 on a consolidation base. Revenues from the digital privacy segment increased by 30% to 117.1, comparing to 89.8 million last year. It's including also 2 weeks effect of ExpressVPN. This year, we decided to introduce a new non-GAAP metric, the pro forma adjusted EBITDA. I will give you a quick overview on that. Upon the first consolidation of ExpressVPN and KAPE, according to the accounting rules, the deferred contract cost was fully zeroed out, which create a situation that we have revenues without the attached amortization of the deferred contract cost that should have been connected to that. And the immediate effect, it's increase in the adjusted EBITDA and the EBITDA margin only because of the accounting rule. We as a management decided to present the pro forma adjusted EBITDA. It's our adjusted EBITDA with adding back the amortization of the deferred contract expenses. Our pro forma adjusted EBITDA is 78 million, comparing to 39 million last year. Our operation profit is up by 257% to 38.2 million, comparing to the 10.7 we had last year. As for the cash flow, KAPE continued to be cash generating business. Our adjusted cash flow from operation is on 44.1 million, comparing to 20.4 million last year. Adjusted operation cash flow attribute to current financial period increased to 78 million. We currently have 120 million committed facility from our club of banks, and we increased our committed RCF from 10 million to 80 million, increase of 70 million. The cash balance by the end of the year is 27 million and net debt 457.5 million. The net debt is including both the draw bank facility and the vendor note related to ExpressVPN acquisition. As you may remember, the deal with ExpressVPN included initial cash consideration upon signing and 2 deferred payment unconditional on the 2 anniversary. The first one on mid-December 2022, 172.5, and the second one on December 2023, another 172.5 million. The company intends to fund the deferred payments through our operation and cash flow with support of the committed RCF that we have from the club of banks. Our current net leverage is 2.88, with management expectation to lower it by the end of 2022 between 2 to 2.5 net leverage.
Before moving to the next slide, because I saw a few questions about the net debt position. So just to explain that we have roughly $100 million of net debt from the banks, plus the $345 million we still have to pay to the vendors of ExpressVPN, together 445. The actual number at the year end was 457. Doesn't matter. KAPE is highly cash generative business, and part of the reason we modeled and we structured the ExpressVPN acquisition that we have to unconditional deferred payment. This helped us to reduce to minimize the dilution to shareholders, and by that to increase the accretion from the deal on EPS, as well as to utilize the combined cash flow in order to fund the deferred payments. And very rapidly we'll see a reduction of the net debt position, the gearing ratio, to the normalized level that we target, that is not more than 1.5. Well, I don't think we ever been, we crossed the 2 times combined EBITDA. Slide 14 is a new slide we are added to our deck this time, and will continue to show in the future in order to demonstrate the efficiency of our marketing activity. So what you see on this slide, if you look on the box of H1 2018, the numbers there are firstly the amount of money we spent on marketing in that period. So in the first 6 months of 2018, we spent $43 million on marketing. The users, the customers that joined us in the same period, in the first half of 2018, generated revenues from the point they joined us until today of around $135 million. So on every dollar of marketing we spent in the first half of 2018, we generated $3.1 back until now. You need to remember that a lot of those customers will continue to renew their subscription to the 4th, to the 5th. We have people now for the more than 10 years continuing to renew our subscriptions. So the unit economics is becoming very, very attractive. On the other end, the more younger cohorts, if we look on the H1 2021 box, which are people that joined us less than a year ago, we spent $142 million, and from the initial sell, we were able to recover 90% back. So as we grow and the number of sales from organic traffic sources, with no marketing spend, is going as well, we see that the efficiency of the model, even from the initial sell, is becoming very attractive. So it takes us now slightly more than a year to already be profitable on the subscription sell on a subscriber that will, on average, will stay with us for 4-5 years. So the unit economics is very healthy. And when you include the fact that the unit economics is very attractive to the fact that we already were able to grow our subscriber base to a very high scale, this makes the operational model of KAPE very powerful. We worked very hard the last few years in order to get to this position, and now we're in the best place we ever been in order to accelerate the organic growth, both in terms of numbers of subscribers, the average revenue per user, and the continued reduction in customer acquisition costs in order to create and continue to develop our unit economics even further. And you can see on this slide that every month since we started to be active in the digital privacy market, we were able, net of churn, to grow our monthly subscriber to a very significant scale. And over the years, as we build up our cohorts, we have very healthy mixture between younger cohorts to a more mature cohorts, and 30% of our subscribers as of the end of last year already with us more than 3 years. And those customers drive very high retention rates of high 80s, even 90%, and continue to renew, and it's very attractive renewal income. That is the main reason we see a continued improvement in our profit margins and continued improvement in our cash conversion rates. In 2022, we expect that the cash conversion rates will go up from 51% to 85%, and this is the main reason that we see more and more of our revenues coming from renewals. Another comment worth mentioning is that when we started this year, we gave guidance to the market of revenues between $610 to $624 million. Around 65% of the revenues this year coming already from packages we sold in previous periods. So the visibility of revenues is in a very good place. Another exercise that we've done is that assuming we will only make money from users that we have, subscribers that we had at the year end last year, in the next 5 years, we'll generate from those people close to $1.3 billion of revenues. And in addition, you need to account then that we continue to sell new subscribers. So it's we are scaling very rapidly, which is it's great to see. We assume we'll get to this stage, but obviously worked very, very hard to create an attractive operational model. Overall, now we are finishing the 6 years or entering already in the 7 years since we started to execute on the existing strategy. And looking backwards, it makes me very proud, me and the team, that we were able to grow our revenue line from $38.2 million in 2016 that were predominantly non-recurring by nature to over $230 million of revenues in 2021, and almost triple our revenues to $610 to $624 million this year. That 88% of them are coming from subscription basis, and we are doing it whilst we were able to continue to be very profitable and double our EBITDA margin, which is a great achievement as well. Our business and KAPE as a group is set for continued growth, both organically by continuing leveraging on our very strong product offering and very attractive brand portfolio that enable us to tailor the right offering to many of different customers in key markets, to further develop and capitalize on the group organic growth engine following the acquisition of Upselling and the success in the integration of the Upselling BI and technology into each one of the KAPE brands. Continue grow the average revenue per user, introduce new features, and convert more and more people from the point solution to the suite solution, and like we've done with CyberGhost in the past. And we are continuing to be acquisitive. So I saw that there are a few questions about the acquisitions as well. We are now very busy on driving successful integration with the ExpressVPN, and our 4 priorities for the year are: 1, to grow organically our subscriber base; secondly, to continue to develop the lifetime value by improving retention rates and growing the average revenue per user; thirdly, to realize the full benefits from the Upselling acquisition, predominantly now by reducing the customer acquisition cost of ExpressVPN; and fourth, and the most important one, is to drive successful integration with ExpressVPN. So don't expect we'll do any significant acquisition this year. This year is mainly the main focus is on the 4 initiatives that I just mentioned. Having said that, we are definitely remaining acquisitive. We were able over the years to build a very strong track record and execute on 7 acquisitions that we were able to integrate very well into the group and build a very strong offering. We became one of the more attractive consolidators in the market, and we have great teams that they are very keen to join forces and merge their businesses into KAPE. And we will choose the right time to pull the trigger. We already have 7 different companies that we monitor on a regular basis that we think can add value to our group with a similar approach, whether to expand our product offering, to continue and develop and build our market position in verticals that we already operate in, or the third option is to continue leverage and develop the competitive advantage of KAPE with our very advanced user acquisition capabilities. Overall, summarizing the performance of the group in 2021 and looking forward to the performance in 2022 and beyond, I couldn't be happier with what we were able to achieve. First of all, it's always nice that for 6 years, everything that we said and promised the market, we were able to do more, and we over-delivered. We were able to build a very scalable company that today serves close to 7 million paying subscribers that trust us in helping them to live more secure and private digital life, and it's a great position to be. Looking on the results in the first quarter, we started the year very strongly, and we are very confident in the performance of the business and our ability to hit the guidance that we gave the market for this year, and to continue to drive a very scalable growth in the next few years. So thank you very much. This was the end of the presentation. Now I suggest Jake,
Ido,
we take
Ido, thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab that's just situated on the top right-hand corner of your screen. But just while the team take a few moments to review those questions submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Ido, Oded, as you can see, we've received a number of questions throughout today's presentation, and if I may, if I could hand back to you to please read out those questions and give responses where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
No problem at all. I see there are a lot of questions, so I'll try to answer all of them. If we don't have enough time, feel free to drop us a line, and we'll be very happy to provide the full answers. First question is, when can shareholders expect dividends? So it's a good question, and the board always monitor the best use of capital and our resources. So far, we took a very strong view that we can generate much more value growing the business, and I think that it proved to work very well for us. We're able to grow our revenue and number of customers from about 145,000 subscribers in 2017 to more than 6.6 million today, which obviously had tremendous impact on the growth in the top line. So we don't have concrete plans at the moment to start paying dividends, but this is something that can easily be changed. But the focus now is very clearly on growth. Next question, great performance again. Please, could you provide an update on the board discussion, which you previously mentioned about moving to the main market, PLC, or a New York Stock Exchange or NASDAQ list? I feel either would benefit the company's valuation. Thank you. Great question. It's something that we are discussing on a regular basis. It's very hard to say what is the right timing for that, but we are definitely looking on ways to maximize value to shareholders, whether to move to the main list here. I think now we're in a size that fairly easily will get into the FTSE 250 index, which will improve liquidity as well, or to do a listing on NASDAQ. So this is something that is work in process, but there is no decision yet to either way. But this is something that we as a board and management develop in the background, and we will decide what we will think will enable shareholders to maximize the return. The geographic split of revenues shows only 29% from the US, $66 million, where your presentation shows that 47% of subscribers in the US. Can you explain the difference? Is the ARPU materially low in the US?
I will take it. When we are presenting the financial statement, that geographical split, it's according to the company collecting, the entity collecting the subscription, and not by the user, where is the user located. While in the investor presentation, we are presenting you where the user that is using our product come from. So it's a different split, and this is the reason the numbers is not ends up. We don't have a lower ARPU in the US, the other way around. We are very pleased with having a big part of our sales deriving from the US and Western EU countries.
It's a good question and a good spot on, but for example, CyberGhost is a non-US entity, but if there is a sale in the US for CyberGhost, in a financial statement, it will be classified as a non-US revenue, whereas in reality is a US customer. So it makes more sense to show it based on the location of the customer, not based on the collecting entity. Next question, what is your future M&A strategy? Do you expect to make significant acquisition in 2022? I think we covered this in the presentation. We are very busy on the integration and growing the business organically. So no concrete plans at the moment to execute on further acquisition, but definitely we are remaining acquisitive. Stripping out the contribution from ExpressVPN and digital privacy revenues actually declined. So in the digital privacy, we have four brands. We have CyberGhost, Private Internet Access, ExpressVPN, and ZenMate. We already started the process to consolidate the different brands to mainly two brands. One is ExpressVPN and CyberGhost. So as we progress the conversation with ExpressVPN in the second half of the last year, we started to already think on the day after and gradually reduce the focus from private internet access. We have great plans, by the way, to private internet. We want to take it to a full-blown consumer security solution, but it didn't make sense to invest a lot of marketing spend on a brand in the VPN market that we knew that the focus will move away to ExpressVPN as the premium brand and CyberGhost as the mainstream brand. Next question, churn has increased. Not sure how much time we have, but I'll continue until Jake is stopping me. Churn has increased slightly with retention down to 81% over 6 months. Why is that, and what are the expectations in the coming year? So nothing happened. The only reason to the slight decrease from 83% to 81% is the impact of the consolidation with ExpressVPN. ExpressVPN is a premium brand selling at much higher price point, $99, compared to CyberGhost PA at $40-$45 for the similar type of package. Because of the higher price point, the proportion of customers taking the monthly subscription is higher than the other brands of KAPE. And monthly subscriber tends to be less sticky. So this is why, just because of the combination, there was a slight decrease, but nothing happened. We are very pleased with the retention levels, and as management team, any number above 75% is a good number. Can you comment on the progress that has been made on upselling more services product to customers and give some idea of the near-term potential in this area? So KAPE is a SaaS business. We have a very simple operational model. Every decision we make, it should either improve the lifetime value, which is a combination of retention and the average revenue per user, or reduce the customer acquisition cost. Start from the end, the customer acquisition cost, the best way is to grow the proportion of sales coming from organic traffic sources, and this is the main reason we bought Websellence last year. On the lifetime value front, we make a lot of effort to grow the average revenue per user, and quite successfully. As a SaaS business, we don't operate in the traditional way of building a portfolio of product and then try to sell as many products as possible to the end customer. We are moving more and more customers to the suite solution in a higher price, like we've done with CyberGhost, taking gradually the average order value from $45 to $75, which is similar to an upsell. It's just higher average revenue per user. With ExpressVPN, we're doing it slightly differently in order we would like to continue or maximize the retention rate and keep the simple price point at $99 per year, and hopefully reduce the churn, especially in the first 2 years, and the impact on the lifetime value will be the same, if not more significant. How should we think about the organic growth opportunity going forward in the Websellence business? First of all, we are very happy with the way Websellence is operating. When we bought the business, Websellence, there was some question around the impact of Websellence losing its independence in the ability to compete, being part of the KAPE group. A year after the transaction, this risk didn't materialize, the other way around. And the best example is that Websellence, on a full year basis, gone 52.5% in revenue 2021 compared to 2020, and it's all third-party revenue, so it's not the sales generated to one of the KAPE brands. So we didn't see any impact of Websellence being part of the KAPE group, neither on the end customer or any significant movement in the software providers work with Websellence. The quality of Websellence is very high. It's a very good business, and we look on Websellence both as a way to make the KAPE brands better, but by selling more product through organic marketing channels, as well as an independent growth engine. and this is why we classify it as a standalone separate digital business segment, to be able to demonstrate the very good job that Web Sense are doing in growing the revenues into new verticals or existing verticals to third parties, or existing verticals that KAPE doesn't have any software solution in. Great results following the significant acquisitions you made last year. Are the business now fully integrated, and do you see further cost savings? Also, do you expect to embark on further M&A moving forward? Firstly, thank you very much. We are not yet fully integrated ExpressVPN. It's still a work in process, but it's going very well. And I'm very happy with the way it's going so far. We definitely remain acquisitive, but as I said as part of the presentation, don't expect anything significant before, and the integration with Express will be more or less completed. What new capabilities are you looking to develop functionality and geographically, either organically or through M&A? It's a good point, and our vision is big. We want to help people to live more secure and private digital life. And by that, we need to continue to develop our product in order to provide good level of security to every angle of our customers' online activity. We will do it either through our very strong R&D capabilities or through acquisitions, similar to what we've done so far. We are looking on different avenues. We are very interested to see the way to help people to protect their home Wi-Fi connections, and a few other very exciting R&D projects in the pipeline. I think there's one last question. Is the higher level of share-based remuneration at $5 million likely to continue?
It will continue for the coming the next year and the year after. It's mainly related to two grants we did over the year on December and in March.
No, I think the question, the executive. So the remuneration committee always looking to retain top talent in the team, both in the executive level and the other part of the team. I'm a big believer that as a tech business, we should implement equity schemes, equity participation scheme with employees. Almost each one of our employees in the group has some as share options, which is the best way to retain people in the long run in a very competitive markets. And I'm very pleased that a lot of our employees share the success and the value we were able to create to all with all other shareholders. What is the trend in product pricing in the market? For example, are you able to pass on inflation price increases? So first of all, as the market grown, we were able to build up KAPE as one of the leading providers globally. And most of our products, most of our brands, we increased prices a few times in the last 18 months. ExpressVPN, as I mentioned, is a very simple from day one. ExpressVPN only selling annual subscription for $99. So far, we don't see any significant pressure in terms of inflation, both on the cost of employment, but definitely we are now in a very attractive place, and we are one of the leading providers of consumer privacy and security market. So we will always optimize and do whatever we can in order to deliver the best unit economics between the lifetime value and the cost to acquire the customer, or the cost to acquire to provide the service. As far as I see, this is the last question, Jake.
That's great. Yeah, Ido, Oded, thank you very much for taking the time to address all of those questions that have come through from investors this afternoon. And of course, if there are any further questions submitted today, we will make these available to you after the presentation for you to review. And ladies and gentlemen, we'll publish those responses where it's appropriate to do so on the Investor Meet Company platform. Ido, perhaps before redirecting investors to provide you with their feedback, which I know is particularly important to the company, if I could please ask you for a few closing comments to wrap up with, that'd be great. Thank you.
First of all, thank you everyone for joining us today. We are very happy with the performance of the group so far. As I mentioned, we started 2022 with a very strong momentum, and so far we are trading very well and very confident that we will hit the numbers that we guided for the year. And especially, I'm happy with the fact that millions of people around the world trust KAPE and each one of our brands to help them to live more secure and private digital life, because it's the reason that we wake up every morning and work hard in order to enable people digital freedom and to continue to enjoy from digital services, but in a fully secured and private way. So thank you very much, and I'm looking forward to meet you in the next time we release our half-year results.
Ido, that's great. Thank you very much indeed for taking the time to update investors this afternoon. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of KAPE Technologies PLC, we'd like to thank you for attending today's presentation. That now concludes today's session, and good afternoon to you all.